As promised, I say I would come on live and talk about mortgage process. So if you are here to be educated on mortgage application / approval, you're in the right place. We're gonna go live. I'm going to record the live. I'm gonna save it so that you guys can go back to it at a later date. Richard Kidd is my go-to. Say hi, Richard.
Hello, everybody.
Yes. Hey. The thing I get nice. Yeah. So Richard has a whole lot of experience when it comes to mortgage. Right? So this live that I'm going to do today, I'm going to save it. Every single information that you want going forward regarding mortgage and being approved and closing costs and processing fee and interest rates and up and down of the rates and everything, we're going to try and cover it in this one live. I'm going to save it. I'm going to keep it on my Instagram. So if you're an international buyer, if you're a local buyer, you can always go back to it for whatever information that you're going to need. I am going to wring Richard dry today of every single information that I can get from him. I'm going to speak to him as if I am a buyer so that buyers can better understand what we are talking about. So Richard, introduce yourself.
Good afternoon, everyone. My name is Richard Kidd. I am currently a mortgage broker. I provide mortgage consultation and loan processing for several financial institutions in Jamaica. My background is that I worked at a building society, Victoria Mutual Building Society, for many years, and I think I have a wealth of experience in the subject, and therefore I am able to join Miss SWABY so that I can help to clarify and to just demystify. She hates me to use this word, but
I tell you, do not use the word demystify. We're keeping it real. We want down to the 12-year-old to understand this conversation.
So we're going to break down.
Are millionaires.
Absolutely. So we are going to break down the whole mortgage process.
Richard is saying, on an estimate, about 1% of people can afford to buy cash. Correct?
Correct, right.
Yes.
So what we're saying is that many persons need mortgage assistance when they're buying property. So very few people can afford to buy a place for cash. So everybody else, the rest of us, the 99% of us, need to borrow money to do it. So we need mortgage financing. There are financial institutions that provide financing, and of course, those who are working on the PAYE system can get mortgages through the NHT, because that is a contributory scheme where people make contributions from their employment, from their salaries. And also self-employed persons can also get mortgage financing, because you can make voluntary contributions to the trust. Or once you're employed and earning a salary, you're supposed to pay taxes and supposed to pay it. It's the law. You're supposed to pay deductions to the National Housing Trust as one of those institutions. So you can get financing from there, and then you can get joint financing through the NHT and one of the financial institutions if you need more than what the NHT provides.
All right. I like how you're on NHT. Question.
Yes.
When purchasing, some people feel like they need to go to NHT and then go to the institution that is financing the additional.
Right.
Do they need to do that, or you guys, once they come to you as the broker, you can deal with NHT on their behalf?
Right. So there's no need to simplify the process of applying for your NHT benefit. The NHT and mortgage institutions, and they call them participating institutions, have a joint financing arrangement where you they do the processing behind the scenes. So the applicant just needs to go to one institution, one place, the mortgage institution. In my case, they come to the broker, and we will do the application for the NHT portion as well as the additional amount that they need from whichever institution, to prevent them from going all over the place, back and forth.
Okay.
So you just go to one place.
So that means all of when they're making their monthly payment, it's just one payment, because
One
it
payment.
would already be in the calculation of what you guys
Correct, yes.
And then you would pay over.
We
NHT
pay over to the
portion.
NHT, yes. So the financial institution, they have this joint arrangement where all of that is taken care on the back end. So the applicant just needs to go to one financial institution who will handle the NHT application along with the application for the bank. Just do one joint application.
Okay.
Right.
All right. If anybody have any questions during this, you just type it and then we answer, because we don't have enough time to answer the question during the process. All right, Rich. So we're going to speak both locally and international for persons
Applicants,
who want to
right,
know,
right,
applicants.
right.
But let's hit locally first.
Sure.
So say I come to you and I said, Mr. Kidd, I think I'm ready to purchase a property. What do I need to give to you in order for you to start that process of giving me an approval or making me approve, or let me know how much I will be approved for to get a mortgage?
Right. So, remember, a mortgage is you borrowing money that a financial institution has to lend. So the principal thing that a financial institution is concerned about is, can this person pay back the loan? So they're going to give you a lump sum, and you will be required to pay in, if you get a mortgage for 25 years, then that's 300 months. So for the next, after the loan is disbursed for 300 months, you're going to be required to make a monthly repayment. So the institution wants to know, does this person have the ability to pay? So they need to look at your income and also what is your monthly loan obligation. So income is what you earn, and then whatever loans you have otherwise, then they need to take that into consideration.
All right. So what you need to give them to prove
So
your income.
to prove income for employed persons, we'll need an income letter and the last couple of pay slips.
When you say couple, how much?
Typically 3 or 4 pay slips. There are persons who earn commission. So for commission persons, you'll need more than that. For persons who get overtime on a consistent basis, then we're going to need more pay slips than the 3 or the 4. So we probably need 12 months to average out how much overtime you make, so that we can ascribe a figure to help your income situation. For commission persons, maybe a year or 2 worth of pay slips will be required.
So I don't want him self-employed.
Right.
All right. So like a person who is employed.
An employed person, it's your job letter and the last 4 pay slips. Typically.
Job letter and pay slips. ID, what else? I want
so
all of
okay,
it.
so to do the calculation, we'll need your ID, because we need to know how young you are, so that we can because the institutions don't want you to be paying loan after your normal retirement age.
Okay.
So we need your ID, your pay slips, and then we typically need, nowadays we have credit bureau in Jamaica, so we need to do a credit check, so do the credit report. But to do a rough calculation, then the individual can disclose to us what their monthly loan obligations are, so that just tell us what kind of loan payments they have, and it so that we don't have to pull the credit report too early, especially if they're not quite ready.
Question: pulling the credit report multiple times, does that affect your credit?
In Jamaica, no. In other jurisdictions, it does. Okay. But yeah, just pulling it
so
does.
Pretty much, as a employee, you need a pay slip, you need 3 pay slips,
yes,
job letter, ID, you need to do a credit check, you need proof of address.
Not to do the pre-qualification.
Not to do the pre-qualification.
Right.
Okay. All right. So after that process, You get all of that documents from them, then you start.
Then we can do our checks. We can look at your income. There is what is called a debt service ratio. So for institutions have set a limit. Only 45% of your income, your gross earnings, that's the earnings before tax, should be used towards paying loan obligations, because we use gross, that is before tax, because most persons have to pay income tax, which can run anywhere between 25 and 30%. 45% towards loans, right? That would be 30 plus 45, that would be 75. And then all you're left with is 25% of your income to live off otherwise. So to buy food and what have you. So
when the mortgage officer is processing the mortgage, right? What percentage of your income do they consider in order to apply you?
45%. 45% of your income goes towards servicing loans. And so let me add right here that loan servicing includes existing loans that you have. So if you have a car and you have a car loan, that is taken into account. If you have a personal loan, that's taken into account. If you have credit cards are really unsecured loans. So that's also taken into account. 5% of some institutions use the credit limit. Some use the balance of your credit card at that particular time. So it's 5% of the credit limit or the balance. Then the monthly repayment on any car loans or personal loans. And then the proposed loan, that monthly payment, all of that added together should not exceed 45% of your gross earnings.
All right. Not rough.
We won't get to see the questions, will we? If they're posting questions.
No, not yet. I'm going to have to answer it. When we finish, then we'll go through and see if there's any question. If there's any question, you can add it, you can type it, and then I'll go through and try and answer them. Or you can send a DM and I can answer. Also, going to put Richard's information when I post, so you guys can reach out to Richard. And then if you're buying something going there, you have to come back to me. So no matter. Alright. So we're going to use a target number to break down what it looks like. Just a random number, figure, for property cost. So we can better understand exactly what we're getting ourselves into when purchasing. And when we say break it down, which I want to break it all the way down.
No problem.
So that my clients then can understand it, including myself. Because remember, some of your clients.
Absolutely.
Okay. I buy all my properties. Yeah. So say we're buying a property for $30 million.
Okay.
And I come to you and I said, Rich, I see an apartment that I really like, and is 10% plus 30 million is how much? 33?
Yes.
All right. So I would have my 10%. So after the 10%, you do think it's 30 million, right? So I'm taking 90% from the bank.
Yeah.
So I want a $30 million loan from whichever institution that you can find me the best rate.
Right. All right. So let us break down something now. So for first time, for persons who are buying property for the first time, you're a first time homeowner. A lot of institutions now will lend you up to 95% of the purchase price. Some will even go as high as 97%.
Does that go for international buyers?
It does not go for international buyers. So that's for local buyers. They lend you up to 95%. For international buyers, you can, and once you're a Jamaican living overseas, and you can prove your Jamaicanness, yes, you can prove your Jamaicanness. Now, remember, we heard recently that it's not just being born in Jamaica doesn't make you Jamaican, but for the purposes of borrowing, then once you're born here and you have a Jamaican passport or a birth certificate, then we can show you get 90% financing. If you're non-Jamaican, then you get 70% financing
Oh,
typically.
70,
Yes.
not 80.
No. Well, between 70 and 80.
Okay.
Some institutions may go
maybe-
to 80.
Okay. All right.
Yeah.
All right. So we are at the 30 million. I want to buy a house for 30
For
million.
30 million.
And I want 30 million.
Yeah,
from-
let's assume that you have some first time owners
I'm a
here.
first-time owner.
First time owner,
Mhm.
and you want to buy a property for $30 million.
The property
Then
is 33, but I want 30 from the bank because I have my 10% deposit.
or can we, just for simplicity, can we say the price is 30?
Okay, sure.
So for simplicity, let's do it at 30. And let's say you are going to be paying a 5% deposit.
Which are just 10 now? Just 10.
You want us to use 10?
Yeah, because
All right.
most vendors want 10% deposit.
Okay, that's fine. No problem. So 10% deposit for 30 million property would be 3 million. And you'd borrow $27 million. Right?
Okay.
Let's adjust these figures.
Should I hear that before? Don't
Yes.
So we need to ask me everything earlier. I never did ask me that.
All right. So let's say it's somebody who is 30 years old, 35 years old, and you can get 30 years to 30 years to repay.
Question: is the 30 years the max that the institution?
It is not the max. So again, different institutions vary.
Oh.
Some institutions say we're not lending you for terms past age 65. One or two of them go up to age 70. So whatever your age is, minus it from age 70, and that will tell you how long you can get to repay. But just for a typical person, we just use 30 years in this instance.
So we are borrowing 27 million from the
So
bank.
27 million. And let's say, should we use NHT?
Yeah,
Let's
right.
say one NHT benefit. One NHT benefit and the balance from another financial institution. Average interest rate is about 8.5% now.
Where, Richard?
Do we have to call the names of the institutions?
No, we don't advertise no bank.
No bank, right. So average interest rate is about 8.5%.
Okay.
Yeah. And the NHT. So one person can get $9 million from the NHT now, and the balance from a participating institution. So 9 million for 30 years from the NHT, that's going to work out to monthly payment of 50,730, and the other 18 million would work out to be 134,950.
What is NHT interest rate on that 9 million?
Maximum 5%. And that's a 9 million would be at 5%, and 18 million would be at 8.5%. So that would result in a total monthly repayment of 185,680. 185,680.
So if I'm borrowing 27 million,
Yes.
between you, NHT would give me 9, so that would leave us with what, 18 million?
Right.
So they say KAMEIKA SWABY Bank giving 18 million plus NHT 9,
Right.
plus the 27 million.
Correct.
The monthly payment for that would
185,680. $185,680.
108. Okay. Is that one flat rate that you pay every month, or do we need to be insured as well?
All right, so that is principal and interest repayment. So that's straight calculation, principal and interest. Now,
we know once with the mortgage, it has to be insured.
then it depends. So I shouldn't say it depends. Yes, there is insurance. A lot of institutions require you to insure your life. So there's life insurance. And then the property has to be insured. So there's property insurance, or peril insurance, they call it. And if it's a strata complex or an apartment complex, then you also will need, may need to insure the the building, but you also insure the loan amount.
Okay.
Or
And that's-
insurance may be part of the
And that's
maintenance
mandatory.
issue. Yes.
It has to be done.
Yes. So, but principal and interest, which is just straight monthly payment without any of the insurances, is
You have an-
185
You have an
680.
idea, an estimated what insurance could look like?
All right. So yeah, sure. We can do that calculation now. So if for 27 million worth of insurance, because that's the loan amount, you'd want to insure your life for that. And let's say it's a house, replacement value would be on a 30 million property, maybe, let's say 24 million is the replacement value. And about an additional 17,000 approximately for life insurance and for peril insurance.
So which would probably bring us up to about 200,000.
About 206,000,
About
yes.
206,000.
Yeah.
For a $27 million
loan. So it's 30 million is the purchase price of the property, and the 27 is the loan amount. Yeah, and we are assuming a 10% deposit and 90% financing.
All right, so pretty much we're saying a $30 million property, you have your deposit for 10%. The bank, between the bank and NHD, if you're a contributor to NHD, you would end up borrowing 27 million from the institution
and NHD
combined together, and your monthly payment looks like about 200,000 per month, and that would include your life insurance and the property insurance. All right, my next question for you.
And so we want to clarify now, if there are two persons, let's say a couple buying, and you have two NHD benefits, then the repayment will drop. Will drop a bit.
NHD,
I think
gives rate is low.
Yeah, so they give 17 million for two persons. Yeah.
So then that you would borrow less from the bank.
Correct, right. So 17 would be NHD and 10 would be the bank.
All right. So my next question is we're sticking with one person.
Yes.
I mean, we can, if two people want to do, we can always calculate it when they reach out. How much would you have to be earning to be qualified for that 27 million?
All right. So you recall, or for those just joining, there are, as we said, there's a ratio that the bank is a universal ratio in Jamaica. The bank does not want loan payment, debt servicing, loan servicing to be more than 45% of your gross earnings, right? 45%. So if you'd have no other loans and
no
just
car, no car payment, no furniture payment, no other
loans, and you have a monthly payment of 206, then let me tell you what the earnings ought to be. Your earnings should be like $458,000 a month.
All right, so you hear that. So in order to be qualified for a $27 million mortgage without no other loan, because if you have other loan, then your income would have to be more.
Correct, yes.
So with no credit card, no car payment,
no personal loans,
no, you would have to be earning $458,000 a month to be qualified for a $27 million mortgage.
With monthly payment of $206,000.
Payment of $206,000.
Right.
Can't break it down better than that, Rich.
Yes.
Can't break it down better?
No.
Right.
That's it.
For whatever reason, right, Rich?
Yes.
I lost my job, or I can't make my payment on time, or I'm back in 2 months payment.
Mm-hmm.
What advice do you have to give to clients? What can they do to not lose their property?
All right, so that's a real thing. Most institutions, if not all, are very cognizant of the fact that, you know, life can happen. You know, persons can lose their job, different things can happen. Now, you can't keep that information to yourself. So the minute it happens and you realize that you're going to have an issue, then it's incumbent on the person to go in. You know, the person needs to go into the financial institution, explain what has happened, and try to make an arrangement with them on how you're going to settle. Some institution will ask you pay interest only, but if it's a mortgage that has just started, then the majority of the monthly payment will be interest. So you need to go into the financial institution and talk to them so that you can have some form of arrangement with them to settle, to pay. Of course, they can't extend, you know, lenience indefinitely, right? But you need to go and talk to them so that they can, you know, be aware of your situation and work with you to minimize the impact. Because, you know, as you know, they're lending you depositors money, and they have to account for it, and you know.
All right. My next question is processing fee.
Right.
After you do all your checks, you give them a pre-approval letter, give it to my realtor find a property. Now you start the real processing
of the mortgage.
Yes. The mortgage. What am I looking at?
In terms of fees?
In terms of fees that I have to have on hand.
Right.
And I'm not talking necessarily closing costs, but for the bank.
Okay. So I think we should discuss it as a whole. So closing costs.
All right.
So closing costs for a mortgage can run you up to 10-11%. So if you're paying a deposit of 10%, then you ought to have 10% for closing costs, or a little more. Because let's break it down. The banks will charge you 2 or 2.5% for processing fee alone. There are costs associated with registering the mortgage, stamp duty and registration fee and attorney's fee. Usually, by the way, there are about at least three attorneys involved in a transaction like that. The vendor will have an attorney, the purchaser has an attorney, and the bank has an attorney. So the bank, the purchaser has to pay their own attorney, their personal attorney, and the bank's attorney to pay for them to register the mortgage. So
the purchaser
pays the bank attorney, yes, because you have engaged the bank for this loan, and then they're going to say, okay, to their attorney, hey, this person pay your attorney. Sometimes your attorney will charge you 2%. The bank's attorney may charge you 1%. That's 3%. Processing fee maybe 2%. That's 5%. And then stamp duty and registration fee can be about 7%. And then to transfer, you have to pay stamp duty and registration fee on the transfer and on the mortgage. So 2 different stamp and registration fee. So all of that can come up to about 10%.
And 10% of 27?
Of 10% of 27 is roughly 2.7 million.
Okay. So that means the purchaser would have to have, apart from their 10%, they need to have about 2.7 million
additional, yes.
Additional in order to.
And of course, they're going to need to do a valuation and a surveyor's ID report. Exactly. So you're going to need,
those are mandatory.
Right.
So we're looking on, if you're purchasing
a 30 million property,
you have to at least have a little 3 million put aside, roughly. I would just say 2.7.
Right. And then 3 for the deposit.
Yeah.
They really need between $5 and $6 million of savings.
You need 6 million savings.
So one of the fundamental part of buying a property is really saving. Because you have to have the deposit and you have to pay closing costs. Now, of course, we were doing a 10% deposit, but again, remember that for persons living in Jamaica, then you can actually get an additional 5% to borrow, which means that you're borrowing 95%. So after you pay a 5% deposit,
interest Can the interest go up after getting
the mortgage? Yes. So institutions, all of them, what they do is variable rate mortgage. We hardly have fixed rate mortgages in Jamaica. So the mortgage is variable. The mortgage interest rate is variable. So it can go up or it can go down. It doesn't only go up. There are times when it has trended up, but in the last little while it has trended down, and the BOJ has been sounding alarm that the banks should reduce rates some more. So it has trended down. One institution up to recently was doing 11%. Now they're down to 8.95%. So interest rates have been coming down.
Okay.
And so they reduce it for new borrowing, but also the existing portfolio. Sometimes they cut the interest rate a bit. Yeah.
All right.
It's a variable rate.
What would you say now? Right now, the average interest rate
about
right now is
8.5% approximately. Yeah.
All right. So normally, getting a pre-approval letter, how long? What's the process like? How long?
No, somebody can engage me to do their pre-qualification. It's usually immediate. It's if you send me your information, as we had said earlier in the live, to get a pre-qualification, we're gonna need pay slips, last 3 months pay slips. We're gonna need your ID because we need to know how young you are, and we need information on your monthly loan obligation. So if you have car loan, personal loan, credit cards, we need information on that. And once you give me that information, I can produce a pre-qualification letter within 24 hours.
Okay.
Yeah.
All right. Another question I have, right?
Sure.
When you purchase your property, say for example, so I win a letter tomorrow, I'm gonna decide I want to pay off the bank. Is there any penalty?
Banks usually require you to give notice. So one institution I know said, just give us 3 months notice in writing.
Okay.
And some will say, give us 6 months notice. Some say you can't pay it off before 2 years because that way they're not going to really make any money off you.
What you say?
After going through all of that processing,
Yeah, but
they
you
need
pay
to.
for that processing though, Rich.
Yes, but so different. So all of that is going to be in your mortgage deed, which is the formal mortgage contract,
Which we don't read.
which most people don't read. But those are snippets that they will tell you, hey, if you to pay off the mortgage, you can do it after 2 years, or you have to give us 3 months or 6 months notice in writing.
So that they can get more money.
Yeah.
Okay, you hear that?
So remember, a loan is a mortgage is a long-term loan. They expect you to borrow it for 25, 30 years. So if you're going to pay off this money, they're going to be getting back all of this money now. They need to know what to do with it. So technically speaking, so they need some time, some notice.
Yes. So remember that, because the reason I asked that question is because I was selling a property for a client once, and she called me hysterical. Mika. The bank saying that I need to pay a fee because I didn't give them the notice. Da, 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 da. So it's good to, as Richard said, send them an email in writing, letting them know that you're thinking of selling the property, giving them a 6 or 3 months notice.
Yeah, at least give them a minimum of 3 months notice. Yeah.
In writing. So you can have a good idea to shop around when doing your mortgage, or you just go to whichever bank to bank with.
Yeah, so we're typically very we listen, the processing, the fees, they're not very wide apart. Interest rates run within a 1% band kind of thing, you know. What makes the difference is processing time, the speed, getting somebody. Sometimes it's so hard to get through at a bank and so on. Hence why you have people like me, a mortgage broker. You come to me and I can, assess your situation and see which institution would be best suitable for you based on the interest rate and the mortgage term. Some institutions have a lower processing fee. Some have the interest rate maybe slightly lower than the other, or the fact that I am dealing with the processing, I can do it as quickly as possible. Okay. You deal with me, one-on-one, and I push through this thing as quickly as possible. It can happen quickly, and if through your person, if you know it. I'm not saying everybody has to come to me, but a broker is a little more equipped to, knows what is going on in the market and can guide you and direct you to where you
And
can
by the
go.
way, Richard worked with different institutions. So if you have your preferred bank, you
I
can
can
go through that.
still do a mortgage through that bank.
Even though he was the man at VM for many, many, many years, still work with VM, but also
Other institutions.
all the other institutions. All right, let's touch on our international buyers, because
Sure.
I have a lot of those, right?
Right.
And I know I always just say, call Richard,
Yes.
because I don't want to mislead them. But just give us a basic, or just tell us the basic thing that they would need to apply. I want both if they're Jamaican or not Jamaican.
Or non-Jamaicans. Okay.
Most of mine are they're affiliated with Jamaica.
Right.
Someone. So just give me like what would they need to give. I don't want to go too deep into it because I would have sent them to you anyway. But if they call me, what do
To have an idea.
Yeah, have
surely.
an idea to say, okay, you're going to need this, like 3 or 4 items you would need.
Typically the same thing. We need to know their income, and we need to know what loan expenses they have. And we get the loan just like in Jamaica. And they have a even stricter credit report system there. So everything is on their credit report. So we need to get credit report, and in the US, for example, US, Canada, the UK, they have a similar Experian or Equifax. So we need credit report with score from Equifax or Experian. The credit score needs to be no lower than 660 typically. So we need income information, the last 2 years tax returns, and their credit report. So they need to pull a credit report with score, a detailed credit report, so we can see what their monthly payments are up there and do the calculations. So a similar thing, but income, pay slips, credit report, tax returns, ID.
So
that's to do the pre-qualification. For international persons.
Whether they're Jamaica affiliated or not.
Correct. Well, yeah, correct. Same. For Jamaicans though, they'll get a higher loan to value ratio. So they'll get up to 90% financing. Non-Jamaicans will get 70% financing.
Okay. So if you're Jamaican born, you can get up to 90.
Up to 90% positive.
Even if the income is not in Jamaica?
Yeah.
Never send them to Richard.
Up to 90% financing.
Yeah? What advice would you have to give to a new buyer?
So for a new buyer, I would say you must get pre-qualified first. You have to get pre-qualified because you want to. Can you say
that any louder, Richard?
Yeah.
Because a lot of times clients call me and said when they call the bank or speak to their loan officer, the loan officer tell them to go look the property first and then come back to them.
No, it is best to get pre-qualified so that you have an idea what price range property to look for, and the realtor can better help you in finding the appropriate property. Correct. The appropriate thing. So get pre-qualified first. Don't go and look a property and then try to fit, try to do all kinds. Some of the do's and don'ts that I usually tell people when I give talks is that, hey, your first house doesn't have to be a dream house.
I did something with Observer on that, you saw it?
Yeah, no, I don't remember.
Yes.
But your first house don't have to be a dream house. You don't have to necessarily have a guest room.
No.
So try to, buy a modest and appropriate property that that's suitable for your family. If so that you don't try to overextend yourself.
If you're waiting to buy a dream house, you might never ever buy a house.
Right.
Because a lot of us dream houses really dream.
Right.
You're just never going to buy because it's so expensive.
I know in Jamaica our housing is more permanent than in some other places. It's block and steel. So you buy a house and this is where you're going to stay for the rest of your life, at least for a very long time. People don't typically move around once you buy a house, but just look. We can always add, especially if you're not buying an apartment, you can always add to your
Or you
house.
try and get a deal
Yeah,
and you
don't
sell it and
try
then
not
buy
to
something a little
overextend
bit more.
yourself. Also, you have to bear in mind that when you get a mortgage, you are tying yourself to it's a long-term commitment. And therefore, if you are buying a place and you get a mortgage for 25 years, it means for the next 300 months, every month, you're required to make this payment. Do it salary deduction so that you don't get the money in your hand and, spend it. Well, most institutions require you to do it anyway. So salary deduction so that you, visit the property that you're proposing to buy, visit it over and over, check out the area, go there on a weekend to see what the neighborhood is like, go there on a Saturday, go there different times, Sunday night, Saturday night, Friday night, even after going and look thoroughly, look under the cupboards to see if you see sign of mold, just to ensure that things aren't rotting down or chichi not eating it out, so that you can, make the appropriate arrangements for and use that as a negotiating tool for the price kind of thing. Always negotiate, because, it's not, sometimes the set price is not the final. You can always negotiate. So your realtor can help you with that, absolutely. One of the things you should not do also is secretly take a loan that you have to pay back and don't disclose it. Disclose everything to your mortgage broker and or to your loan person, and let them guide you, because what you find sometimes is that, you struggle and you try to push to buy somewhere, and then when it's time now to make the monthly repayment, it's a big stretch, and you're struggling, and it can result in struggles. Yes, typically in the first couple of years of buying a property, you really struggle. The truth is, but it gets easier after a while, because your salary goes up. Typically, if the interest rates kind of hover around the same figure, then that, it likely won't go up, and then peril insurance, like life insurance premiums, drop as the years pass. So your monthly payment becomes more manageable. In the first couple of years, it may be tight, and a lot of people will struggle, but such is life, What else can I think of?
When you're in the market to purchase, I also advise my clients, don't go buy a car within that time period. Don't go get out any credit card within that period of time, because that can affect
Your affordability.
the affordability.
Yeah, correct. Yes. So as we said before, for those just joining, it's 45% of your gross earnings, your gross income, that can be dedicated to loan servicing, which is all the loans you currently have plus the proposed loan, the mortgage you're proposing to take. So if you can, let's say you have a $458,000 gross monthly salary, and the 45% is 206, but you have a car loan of 50,000 and you have a personal loan of 20,000. That 70,000 has to be deducted from the 206, which means that you would not be able to afford a 30 million property. Right? So, yeah.
All right. So, somebody said, what is broker's fee? The brokers that do not charge a fee.
Well, brokers can charge, but typically don't, because the mortgage company pays the brokers. So if I broker a loan for Victoria Mutual, for argument's sake, Victoria Mutual will pay me a commission. So you are not charged a fee. So you can go to a broker and they don't charge you. Some brokers may charge a little fee, especially for overseas clients who the process is a little more cumbersome and lengthy, but typically the brokers won't charge.
And we discuss construction loan.
Sure, construction loans, we can talk about that a little bit. So when you're doing a construction loan, you typically buy the land first. Institutions will lend you some of them up to 80%, some 90% of the cost of the land. They'll lend you that. When you're going to do the construction now, there are 3 critical documents you have to get. You have to get the plans drawn up by an architect and have it passed by the parish council. So once that is passed, the plans, you tell the architect what you want, how you want the property to be laid out, and they draw up these plans, take it to the parish council, and for it to be passed. Once it's passed, then the next thing you're going to do is a quantity surveyor's report. The quantity surveyor is who will quantify, based on all of this, you're going to need 10,000 blocks, 1,400 tons of steel, and put a figure to it. So the quantity surveyor goes through and quantify everything in the house, all of the construction, and they'll say, well, this house will cost 20 million to build. Then you go to a valuator, show them the plans that's passed, show them the quantity surveyor's report, and the valuator will say, okay, we'll visit the site, you'll go to the land, value the land, and then say, well, based on the plans, this house will be 3,000 square feet, In 9 months' time, my opinion is that it will value $50 million, right? So the 3 crucial documents is the plans that has to be passed by the parish council, the quantity surveyor's report, the valuation report that will value the land, and then the building once it's built, assuming it's built in like 9 months. And then now the bank will lend you a percentage up to 80 or 90% of the construction cost.
Oh. Do they give you that money in a lump sum?
You don't get it in a lump sum. You get it in stages. So they will register the mortgage if you're borrowing. If it's going to cost $30 million to build, and they're going to lend you $27 million, then you will they'll probably disburse the first $3 million so you can start the preparatory work. And then the quantity surveyor comes and certify that you have spent the $3 million. Then they'll and recommend how much more to give you. So a QS is very integral in the whole construction process, because he has to come and certify that you have spent the money that was disbursed on the site and recommend how much more you're to get. And that's done until the construction is brought to practical completion.
At what point to start to pay the loan of that money though? From
the first disbursement. Once you disburse first. Some institutions may give you a moratorium and then just calculate. But for my information, my name is Richard Kidd, Kidd, and my email address is richard.d, as in David, .kidd, richard.d.kidd@gmail, or my phone number is 876 465-5654.
You want this construction loan if you're doing a development, Richard is the guy. If you're buying house, apartment, land, Richard is the guy. So there you go. I tried to cover everything. This video is going to be there. I know it's a little bit long. Go on and watch it if you want to purchase a property and you want all of that information. Right? I'll try and do another video sometime down the line. Next time, I'll probably bring on a surveyor or a valuator. Oh, that sound rich?
Of course.
To have a conversation. The next one going to be with an attorney. I have a few attorney friends. So I will invite one on a Sunday. I think Sundays are best for me to do these videos. So anyway, happy Sunday, guys. Thank you for stopping by. I know that your Sunday is very important. And I'm happy I could help. And I am here for you. KAMEIKA SWABY, Millionaire Luxury Realtor. your call. So have a happy Sunday, have a blessed week, live, love, laugh, don't forget. Love you. Bye.